Is it worth it? Let me work it. I put my thing down, flip it and reverse it. It's your primitive, it's why I need number. It's your primitive, it's why I need number. If you got a big, let me search it to find out how hard I gotta work. Yeah, it's your primitive, it's why I need number. It's your primitive, it's why I need number. I like to get to know ya so I can show ya. Put the pussy on ya like I told ya. Give me all your numbers.
Hey, it's Soleil, and this is episode 514 of the Orange Pill Investor. And I decided to rebalance yesterday out of an abundance of caution, which is the anti-irresponsibly long strategy. Probably insanely irresponsibly long to the average investor. Anybody with a diversified portfolio of 25 stocks, uncorrelated stocks or whatever, would probably not be comfortable with 2/3 of their portfolio in a single stock. I moved about a third over to Tesla. And so, of course, I got the okie doke today. What's up, Howard? Yeah, it works like a charm. So not only did I get the double whammy of selling my covered calls at the bottom, the temporary bottom over the last 24 hours for strategy, but I also was fortunate enough to time my Tesla purchases right before it drops from, I think my purchase price was like I don't know. I think I placed my cash secured put when it was like right here. I sold an at the money put. Let's just see what my cost base. Yeah, so I bought 100 shares at 414. So I literally bought the top yesterday. So that was cool. My IRA shares I've had for quite some time, so my cost basis is much better on those. So it's just par for the course. The market loves to play these little tricks. They're kind of worse than little garden gnomes sometimes. But this, I still sleep much. I think I'm going to sleep much better at night with at least some mix. I know Tesla owns Bitcoin, so they could benefit or be punished based on Bitcoin's price, but not in the same way that strategy is. And of course, Tesla already also has things in the works. They're going to be tied to, at least temporarily into their EV sales. And now that Robotaxi is scaling, I believe that should start printing a metric ass ton of money. And at some point, they'll probably be printing so much money that they won't even know what to do with it at that point. And I don't even know. I don't even know if they would be able to spend it fast enough developing their Optimus robots. So there could be some kind of massive pump. And then as they try to scale up production of the Optimus robots, there's going to be a ton of expenses there. So there could be some kind of blow off top over however many years it takes for that while the company burns cash on Optimus. But they might just be printing so much money that nobody even notices or cares. So short term, the market loves to play these games. I sold covered calls on strategy at the bottom, and I bought Tesla at the local top. So I've never been more bullish on strategy long term, but just to make sure that I don't have to polish my resume and go back to work, I decided that it was for the best to at least put on a couple of positions of second best positions. But before we get into, I don't even know if I'll be making any trades. I probably will end up having to roll this down because in a single day, I've already collected half of this covered call on Tesla. So I'll probably have to roll this down to the expected move or something. But before I get into that, I want to show this short clip of Matthew Cratter's video. Biases, got to declare my biases. I've literally watched every single episode of Bitcoin University for the last several years. he has sounded the alarm bells consistently over time. Probably saved his viewers millions of dollars. Getting out of, I can't remember if it was like Celsius or BlockFi. Anyway, people were able to get some of their money out of those things before they blew up. And he's just been a solid Bitcoiner in the space. So let's make this big and let's listen to this for a second.
This is Matthew Kratter's Bitcoin University. Today I want to talk about the mempool queen weighing in on spam. As we've talked about a lot on this channel, Bitcoin spam is an unnecessary burden on Bitcoin nodes. What do we mean by this? I thought today we'd ask mempool expert and Bitcoin Core maintainer Gloria Zhao what this means.
But then, that's kind of, it's a very, dangerous place to be. Because basically, you're connecting your node to the network, and you're saying, I have no idea who my peers are. They could all be trying to attack me. They could all be the same person, hopefully not. And I'm allowing them to send arbitrary data to me. And this data is different from blocks, because when we download blocks, the first thing we do is download the 80-byte header, and we check the proof of work. And if there's no proof of work, which, as we all know, is very expensive to create, then we throw it away. If it's a transaction, on the other hand, it can be many bytes. A consensus valid transaction can be several megabytes, or maybe it can be very big, right?
It can definitely be very big, as Gloria points out.
And so it's going to be pretty easy to meme and clown on these takes, I think, for some time to come. You can see she kind of looks sideways and is wondering if she's talking out of her ass, and doesn't is at least having a brain fart and doesn't know what the actual transaction size. Now, I know she's supposed to just be a mempool policy expert or whatever, but it can't be good for Bitcoin that someone with maybe a specialized knowledge of one area but doesn't actually understand the Bitcoin ethos or some kind of basic pleb stuff about Bitcoin. This is kind of terrifying. And I think that until Bitcoin heals itself from this disease, which you could get into the philosophical part too of whether these, I hate to be the old guy yelling at kids on his lawn, but the younger generation with some kind of Marxist ideologies, which is pretty much, I would say, goes hand in hand with all the shitcoinery. Do we want Bitcoin to cease being primarily a monetary transaction and start redefining terms like, Luke Dasher identified the inscriptions hack, and then instead of actually acknowledging it and fixing it, they just redefined the terms so that it was a feature, not a bug. And it just kind of reminds me of 1984, ignorance is slavery. And, we are now at war with East Asia. We were always at war with East Asia. And, next week we'll be at war with West Asia. So this whole kind of just redefining reality as you see fit is a problem. And, it looks like Bitcoin is mounting a defense against this. So it looks like the anti-fragile, resilient nature of Bitcoin is going to survive. But it seems like, this is either an intentional attack or just the natural flow of an innovative group like Bitcoin Core and trending towards the bureaucratic empire in decline. So it could just be a natural progression of uh, ignorance, stupidity, and laziness. Or it could be that the fiat system is desperately trying to centralize something that's supposed to remain decentralized, as they've been able to do for the last 6,000 years, right? We think we got the answer to this shit, but the fiat system is not going to go quietly. So regardless of whether you think this is intentional, how's it go? Do not attribute it to malice, what can be explained by stupidity. So the kind interpretation, the kindest interpretation would be that they're just too dumb to understand the ramifications and what Bitcoin actually is and is supposed to be, or they're actually agents of malice. Like, that would be the most unkind interpretation. So regardless, it doesn't really matter whether Core is acting with ignorance or malice at this point. The network has to be suffering in some way. It's a convenient allegation for me to make. Maybe this is why we're not getting the God candles, but maybe it's why we didn't get 100K last cycle like everyone was expecting, and maybe it's why we're not getting 444 or Godzilla candles this cycle. Every time Bitcoin faces some kind of threat, whether it's China bans, our price takes a tumble, and then we survive and rebound. And we've rebounded after FTX, after SBF, after wasn't there some Tether? I can't remember if anything happened with Tether, but Tether's probably the next black swan that everyone's forgotten about. But every time Bitcoin shows its resilience, we pump. And so I'm tentatively pessimistic in the short term that until the reduced data temporary soft fork is enabled, if that's a satisfactory cure for this disease, and maybe Bitcoin Core is pruned of some of their less qualified and less ideologically impure developers, maybe the network will realize that we have recovered from this disease and we can go back to number go up. All right, I think that's enough of that talk. Let's check to see if there's any trades that need to be made. So, of course, Tesla is down 10% over the last week. I think it's only down 5% from when I bought it, but regardless. Let's see here. I wonder if I should just go down the line without filtering by account. I don't know. I think that's looking at too many positions. All right, so the cash secured put I sold for $950. It's actually increased in value because Tesla's down. So it looks like at the end of the week I will be assigned 100 shares at $417.50 minus the $950. So like $408 would be my cost basis. As long as it doesn't tumble too much farther, it should be pretty easy to turn around on Monday and sell covered calls against this position and continue to generate some premium here. Price is going against me on my covered calls. Still holding below this number. So if we expire at the current prices by Friday, these will still expire worthless or near it. If they pump, that would just be fine and dandy. I would either have to roll out and up, maybe out to 45 days potentially for a credit, or make the best of it by closing more of these leveraged positions, or any of these 40 9/10s to cover that. Yeah, so everything else is just going to be status quo. Nothing to see here. Let me take a look. Okay, so this looks like an updated. I think the settled cash balance is probably correct because I think I was using about 60 grand worth of margin yesterday. And I tried to buy an equal amount of positions compared to what I sold. So we'll see once that settles how much margin I'm actually using. But thankfully, maybe, I don't know, 25% of this will be, maybe not even 20%. I don't know. Maybe 10% of this position is actually Tesla. Hopefully that'll insulate me from margin calls. All right, the IRA. This has only been on for a day, so this is not ready to roll. CLSK. I've been adding mining stock positions. So when I collect premium, what I had been doing all year, which was failing miserably, was buying these deep out of the money attack the tail positions. And like, I don't know, at least 80 to 90% of them lost money. So instead of buying more strategy leverage, I've taken those premiums and bought mining stocks, which I can immediately turn around and sell more premiums. So collecting premiums and then using those premiums to collect more premiums. This is what allows a portfolio to benefit from it's kind of like a compound interest. So if I collect 1% returns on my strategy position, and then I take that 1% and collect another 1%, now I've collected 1.1% for the week. And it may not seem like much, but compound interest really picks up when you do that week after week. If you do 1% a week, that's 52% for the year. But if you do 1% and you reinvest the 1% and get 1.1%, that ends up actually being 67% returns for the year. So definitely adds up. Now, since this is my only source of income, I won't actually be able to reinvest 100% of the profits. I actually have to remove some of that to pay the bills. But them's the breaks. And I do still have these 16 shares that are uncovered as well. If you want to make sure that your shares don't actually get called away, you do have to leave some portion uncovered to make sure that you don't lose your core position, or have these long calls that will protect your position. 16 shares is not nearly enough to protect 200 shares. It would probably have to be at least 50. But there's 120 delta on these 57 long calls. So should be plenty. Like if we were to rocket back up to 350 or something, I would be able to use these 16 shares plus these calls to make sure that I don't lose my core position. Same deal with these performance covered calls here as well. Not ready to roll. And I don't have anything aggressive in this account. The 10.5 puts looks like it's very close, whether I'll get assigned another 500 shares of CLSK. Let's see here. Yeah, not ready to roll. these obviously going in the wrong direction. Same. Okay, so nothing to do really for strategy, but this Tesla position may need to be rolled because in one trading day I've already collected half of this. So let's see if I roll my strikes down. That's really not rolling them down very far for much. Roll them down for $1. Sure, why not? It's a small tweak. Let me stop sharing. Reshare with no volume, so I don't blow people's eardrums out. So selling options is, you could call it a high frequency strategy, but it's not day trading. And if it's going to be a consistent strategy for years, I consider it an investor strategy. I know it's real easy to say that someone is an options trader, and it makes it sound like they have a very high time preference attitude. But this is about grinding small profits that aggregate over time. It reminds me a little bit of the Atomic Habits book, where they took tiny little improvements to many, many habits and tried to just get a little better every day, a little better every week. And I don't know, they were able to win like 3 out of 4 cyclist championships or something within a couple of years. I see that same philosophy with this. It's not supposed to be like the YOLO buy 0 DTE calls and hope I win the lottery. This is about taking very high confidence trades and aggregating them, week after week after week. All right, so I rolled this for a small credit, and it's perfectly possible that I get whipsawed on this and maybe Tesla rockets back to 440. That's all fine. That shit happens. All right, the CLSK, so that just gave me like an extra $100 to play with. Not much to even speak of. So I will have to let that build up a little bit. And it is making me wonder if I should just go ahead and consolidate these accounts so that I'm not getting small premiums that I can't reinvest in these other accounts. Like the Misty challenge is over, so I really don't need to have this account separate. I can just move all of these positions down into the main account. Probably be a little bit easier for me to keep track of everything as well, but okay. Yep, so I have 600 shares. I sold 6 covered calls. These are all just chilling. So nothing to do but sit there and wait for that one. What's up, Buffalo? What's up, AB? Selling the 215 puts for December 19th. They're starting to look meaty again on strategy. Yeah. And so some people do ask me, why don't I just sell the puts, especially when strategy is trending down. And when prices are stable, usually there's parity between selling the puts and selling the covered calls. So in general, it usually doesn't matter very much if you just sell a put, right? If you sell an at the money put for, okay, the price is shifting on me. But if I sold an at the money put for, 3 days from now, I could actually get 3% return on capital, right? I'd have to put up 20 grand in collateral and I would collect a little over $600. $600 divided by 20 grand is about 3%. So that's pretty insane. It's almost 4% as the price jumps up to 210. And what usually is the case is you can usually buy 100 shares and turn around and sell an at-the-money covered call and get very similar premiums. And so that is the case right now. There's pretty good parity. But I think it was yesterday when I looked at this and strategy was down under 195 or something. And it was definitely under 200. And you could get an extra like percent return selling the puts compared to the calls. Now that the price is back up again, it looks like parity is back. So I could get 700 there versus, 700 here. So you can kind of get a little bit of an edge there occasionally, but it usually disappears pretty quickly. And that's one of the reasons why I don't really care about running the wheel or just buying the shares outright and selling covered calls. I think buying the shares and selling the covered calls makes it easier to calculate my returns, my guaranteed returns, and my call away value. I think that's a little bit more intuitive. Whereas selling the puts, you have to kind of be used to it because you're not really, you could sell an at-the-money put and it's obvious how much premium you're going to collect, but it's a little bit harder to wrap your mind around, okay, well, if I sell the 200, it's not call away value if my shares get called away. It's almost like I'm building in a $10 discount if I'm forced to buy the shares. And I think that's just a little bit of an extra step in understanding that makes step one of the wheel a little harder to conceptualize when you're a new options trader. But AB mentioned December 19th, the 215s. Yeah, so let's check this out. So that would be 1, 2, 3, 4, 5 expirations, right? Selling the 215s, you're going to get paid $2,000. I know a lot of people love the monthlies, and generally when I'm selling out, I'll go out to 45 days. But when I'm doing that, I'm actually selling the out of the money puts or the out of the money calls. I'm generally not doing those at the mark, at the money. And the reason is based on Tasty Trade's research. There's a different theta acceleration curve for at the money and out of the money. And it actually accelerates at 45 days for these out of the money options. And the goal is to, approximately every 2 to 3 weeks, roll it for half the premium. But let's just start with 1 week selling at the money. I could get a 3% return, right? $700. If there were no diminishing returns, then next week would be as big or larger than this 700. But at the money for the week after is only an extra 300. So I can get 700 for 1 week, but I can't get 1,400 for 2 weeks. I can only get an extra 300. So I'm getting 700 for the first week. I'm getting 300 for the second week. And that trend is going to continue. Another 300. Another 300. Now it's down to 200. So if I'm targeting an at the money option, I generally just go weekly. Because in the same time, 1, 2, 3, 4, 5, I can get 5 expirations at 700 a pop every single week. That's $3,500 instead of getting a one-time 1,800 and then I have to wait, a month. I have to wait a month to collect just over half of the same amount of money. So that's kind of less of an issue when you are when you're selling something down here that's out of the money, it's still diminishing returns. Like, let's just check it out. Let's do like the 180. Well, 180 is already kind of small. Let's do 190. So the 190 strike will get me a $1.92. So that's actually a little bit over double. And then, so it's giving me, and keep in mind the first week was only 3 days, 3 trading days, but it's giving me about 200, 200, 200. $175 and $893. And another like $175. So the diminishing returns aspect is not as pronounced out of the money as we extend every single week. 190. Yeah, 1210. It's a glaringly obvious difference at the money. So this is just my personal philosophy, and actually Tasty Trade never even really covers these weekly at the money options. I've never seen, well, I haven't followed them for a couple of years, but I've never seen any of their research really addressing this. And they avoid these short-term options because they don't like gamma risk. So they will target the 45 DTE, hold it for 2 or 3 weeks, and then they exit or roll that trade before gamma starts to rear its ugly head. So the closer you get to expiration, the more that gamma is going to affect the delta. And so you can really, get wrecked. But they do a lot of stuff like sell naked calls too. So they kind of have to worry about gamma risk. Whereas I only have defined risk trades. So if I sell a cash secured put, I'm already locking up the 21 grand here. Or if I buy the shares and I sell a covered call, the worst that can happen, even if the price runs to 500 overnight, is I lose the shares at the agreed upon strike price. So because I do only defined risk trades, I have gamma risk, but it's defined gamma risk, and it can never really hurt me terribly. So that may be one reason why they fret so much over the increase in gamma risk under 20-ish days to expiration. And for me, it's just completely fine. Like sometimes I'm just a complete premium whore, and I'll just sell these at the money puts. And if I get assigned 100 shares of strategy, I'm like, okay, cool. All right. Instead of buying them at 211, I bought it for a 204, essentially. But good call out, AB. Let's see, you sold your Tesla spread for some good profit, threw it into ASST near $1. Yeah. Strive being second to market with the preferreds and no toxic debt. It's definitely an enticing position. I still have a tiny little position, but at this price, it is kind of attractive. Let's see. Especially I want to actually get assigned on some and have others expire for a mix of accumulation and premium. Oh yeah, it's definitely capital intensive. Yeah, the cheaper stocks are more fun to play with sometimes. It's like, it feels kind of cool to be able to just smash by 5,000 shares of something at $1 a piece. What's up, Richard? Finally a green day in an otherwise red market. Nice to see. Yeah, I didn't even have to zoom out today. Usually I have to, like, I refuse to start a video with a red candle. So for the last 6 months, I've had to zoom out past one. Finally I had to zoom out past a year. For for the last 6 months, I could go to the yearly chart and we were at least still kind of positive. But lately I've had to zoom all the way out to the 5-year chart. So it was nice to be able to just look at the daily and not have to play games with the chart. Let's see. Thanksgiving, Black Friday sales start earlier and earlier. All right, so the 5K account holding on by a thread to $6,000. Absolute train wreck since November. Let's see what I got. I got the weeklies on CLSK. I've got this guy that'll expire in a couple of weeks. It's going to be interesting to see if I actually let these shares get called away or if I'll be able to roll this for a profit. It seems like picking up pennies here sometimes. And unfortunately, the dollar isn't worth anything right now. Yesterday, I think you could get a nickel. Yeah, you can't even get a nickel for next week. Yeah, that's what makes it so hard to collect meaningful premium on some of these cheap stocks. So in general, I try to avoid stocks under 10. The miners, if they're trading around 8, that's kind of like pushing it, because if they drop 30%, now they're down to under 5. And it just makes it rough. And so I do have a couple of those positions. And I dumped them. I dumped my, what did I have? No, Cypher is a little bit more expensive. I was thinking about picking up something where Cypher, I think they're considered an AI play as well as the mining. Oh, it's Bitfarms. I dumped my Bitfarms at a loss just because it's so hard to collect, just a few cents here. But at the same time, even selling a 6-cent covered call at $3 is collecting 2% returns for the week. So it's actually pretty good. It's just a pain in the ass. And if the price of this stock collapses 50%, now we're in Strive territory and really struggling. But here's the other AI miner. You could call this a bargain off of its all-time highs, but I mean, I was selling puts and covered calls in iron when it was $6. And once I got priced out of it, I was like, okay, I'll just trade some of this other shit. But it looks like I would have been able to just sell cash secured puts in this bad boy all the way up to $50 a share, $70 a share. Would have gotten assigned and then probably called away again here and here. So definitely could have made a bunch more money with these miners. Which is tough to admit. I hate when the mining stock guys are right about anything. Okay, I can't remember if I didn't roll this because I couldn't find a strike that would even give me any profits. But okay, so I've got a $300 call. Damn thing's out of the money. And I'm trying to sell covered calls against it. So I would have to sell at least the 310, 315 call. So let's see if I try to roll this again. 45 days. At the 315. Yeah, that makes sense to me. It's only worth $1, and I can roll to the 315 and collect, double that. So I'm kind of desperate to just generate any types of premium in this account. The alternative is basically just bag holding and holding on to this long call that may just expire worthless. So gonna try to make the best of it. All right, so that gave me just a couple $100. I've got 457 in buying power. Oh, these guys are basically ready to die. They're approximately 30 days out. So let's close these. 20% higher than yesterday. That kind of sucks because I did close a bunch of leverage down yesterday that would have pumped nicely today. Let's sell for 0.55, 54. All right. That's another $100. Probably gives me 500 to play with. Yeah, 565. I rolled IBIT yesterday. I'll just be hodling this Strive put. I'll be hodling these to see if I get assigned. These 910s have a little bit of extra time on them. Yeah, I'm not really sure what to do with $500. Actually, ACKCHYUALLY, actually. Strategies Ivy rank is up a bit. So let's see what would happen. I've got $500. So let's sell a bullish put credit spread, potentially. If I can get one that's $5 wide. Let's sell the 175 and buy the 170. And let's see if this makes sense. So the delta on the 175 is 0.21. So as long as I capture at least half of this, it should be fine. So that would be like 107 for this to make mathematical sense. It's a little bit easier math if you do a $10 wide spread, because then I can look at the delta in the middle, and I can literally just, since this is a $10 wide spread, that's $1,000, I can just multiply this times 1,000. And as long as I'm collecting this number, so $190, selling the put on this makes mathematical sense from a Kelly criterion perspective. And so this does make sense, but I can't afford 1,000, right? That's just to make the numbers. So if I sell the 175, instead of multiplying this by 1,000, I got to multiply it by 1,000 and cut it in half because it's only a $500 spread. I think that's the easiest way to do the math. So this is, I mean, it's cutting it close, but I'm kind of liking this. Now this is a limited, upside play, right? I'm putting $500 at risk, and the most I can collect is the premium that I'm capturing here. Now this, I could lose this whole $500 if we close below 170 on January 2nd, but I'm kind of liking the idea of this. Oh, unfortunately, the bid-ask spread is pretty fucking wide, so I'm probably not going to be able to get a fill. Yeah, that's the only problem here. That's yeah. Credit. Let's just see. Okay, that worked. And so I would look to go ahead and try to roll that in 2 to 3 weeks. The process is still the same for the spreads as it is for selling covered calls or cash secured puts. Every 2 to 3 weeks, I would be looking to roll this for half of $1.10. So we'll see how that works. That was a nice way to use $500, I think, instead of trying to go to BITF and sell a couple of $3 cash secured puts. But this is adding more complexity to my portfolio, so I have to remember to check this damn thing now. So this is just one more position that I have to follow. Hey, what's up, Emperor? Feels like pennies, but I'm looking at the premium to collateral. Yeah, even on those like cheap stocks. I mean, there was a guy. He was famous for selling covered calls in this clubhouse investment club that I used to belong to. And what was that freaking weed stock? It was trading for anyway, this weed stock was trading between like 50 cents and $1.50 all the time. But he would just sell like $300,000 worth of puts or covered calls, and he was only collecting like 1 to 2%. You know, like one or like I don't know 2-3 cents on $1 stock, but you know, 2% of 300 grand, he was making what, $6 grand a week doing it. That particular stock ended up dropping down to like 60 cents a share. And I don't ever really remember what happened to his position at that point. But yeah, at some point, the damn thing is just so cheap. It's hard to, you know, squeeze juice out of it. But as long as the premiums are there, it's a valid way to go. With something like that, you definitely have to trade on like a Robinhood because you don't want to pay the bid-ask spread and a fee. Like on Tasty Trade, I pay $1 per contract. If I do increments of 20, I think it cuts the price to 50 cents. But if you're only making $2, you can't pay one of those dollars to the platform, right? You got to do stuff like that with free trades. Definitely sold less this month. Bought some more long dated calls and shares straight up. Yeah, when it's this cheap, the long calls just seem worth it. No covered calls yet. We'll probably wait till after December to start writing them. Yeah, that is one negative aspect to the ones that are so cheap is I hate having myself put into a position where I feel like I have to bag hold and wait for the price to come up. So I can't really make Strive a focal part of my covered call strategy until the price is higher. Planet Holdings 13, no. I'm sure it's in my trade history too. Let's see, weed stocks. So I did trade Tilray, but that's not the one I'm talking about. Holy shit, it's down to $1. So I used to trade Tilray when it was between 5 and 10, I believe. SNDL, this is what it was. Sundial. Wow, Sundial is up to 165, so maybe this guy didn't lose his ass after all. Let's look and see. Oof, that's a brutal fucking chart though. Yeah, I was trading it back here somewhere. Let's look and see my history. Do I not even have any history? Thought I was trading this. All right. Well, either I am mistaken or they are not going back far enough. But anyway, this is back when I was horn for premium. And yeah, you can't really get much here. Oh, and they don't even have weeklies. That's unfortunate. Yeah. Anyway, this guy was trading in the Canadian market. I'm not sure. I'm pretty sure they had weeklies back then. There was one more that I traded that I can't remember. Oh, Aurora's ACB. Okay, so my trade history just does not go back far enough. I definitely traded this one and Tilray. That's a bummer. This one used to be 10 or 20 bucks a share too, I think. Yeah. Yeah, the commissions are brutal. Let's see, just curious, before Bitcoin, I was taking L's on the on the planet. Yeah. Did you ever trade First Solar? That was a crazy ride. No, not familiar with that one. First Solar, FSLR. Ooh, expensive. So if I was just a premium whore, I would probably consider trading this. It's kind of expensive, but I mean, it's over 2% return on capital in a 3-day trade. So this thing has got to be pretty volatile. Yeah, this thing is all over the frickin' place. This isn't the one that, no, never mind. No, I think that was Solar City, right? Elon bought Solar City. Yeah, these are pretty legit premiums. Yeah, back in the day, I would have probably been tempted, but it might have been a little bit too expensive for my portfolio size back in those days. All right, I think that is it. Like these two, I just got to wait and see if we recover or whether we're going to get assigned on these. I did buy. Oh, I still have one. I wonder if I'm going to let this cook for another month. Instead of attacking the tail with the 1080s or the 910s, I'm kind of tempted to keep up a little bit of my shenanigans with spreads. They'll be a lot cheaper, right? Because if I want to buy even the 910s at 180 days, they're going to be several $100. Yeah. Oh, actually, this is only the 350s. It only goes up to 650. Let's see what June goes. Oh, June still has 1080s. Interesting. I thought all the 1080s were gone. So yeah, even if I wanted to, I'd have to spend 180 bucks here. But, you know, I don't know if I buy the... I don't know. I don't know that that's any better. Probably would have to go to 500 to make it. Maybe let's try 400. So let's buy the 4. Sell the 410. Yeah, I could get that for cheap. So, you know, just kind of considering maybe doing some spreads. You know, the most I could lose would be what I'm paying, but then having a $10 wide spread, the max profit would be like $1,000. So you're looking at like a 20x, maybe a 15x potential profit here. Now you got to wait 6 months for it, but this might let me maintain my irresponsibly long degenerate fix, do a little bit of revenge betting without having to like dollar cost average into however many I just sold, right? I just got, yeah, I've got seven of these, and my average cost is $480. So if I bought one of those for 70, it's going to be a hell of a lot easier to dollar cost average into a $70 position than it is a $400 position. And right now, this account is back to a small enough size that 7 calls at $990 a pop, 7 times 9, 63. So this is like a $600 position. That's 10% of my entire portfolio is locked up on these very risky positions. So that's taking irresponsibly long pretty literally. So it might be easier for me to make some of these defined risk bets rather than the attack the tails if I want to continue my shenanigans. What's up, dude face? Let's see. Used to scan each morning for high RVol scalps. 5 years later in Bitcoin, all I want is premium and more shares of everything. Yeah, I think we are aligned. Mild shenanigans still count. All right. Appreciate everybody for tuning in. Bitcoin is winning. It's going to win. But I think we're just going to have to do a little bit more work than we had anticipated. I used to think I can just stack sats and that's all that matters. And Bitcoin is open source. Like somebody else is taking care of that shit, right? Somebody else is looking at the code, and I don't have to run a node. I don't have to mine. And it's easier for me to just go to work and stack sats, but it probably is going to take a little bit more than that. If it seems too easy or too good to be true, it probably is. It's probably fine for most people to just get into it for number go up and stack sats, but there does have to be a minimum number of like solid Bitcoiner, orange pilled, laser-eyed, toxic maxis that will, under no certain terms, allow Bitcoin to be degraded. And no matter where you come out on the Knots core debate, and I will admit that I do agree with the core people who say that Knots isn't enough. So we're going to have to get this miner activated soft fork right. And then even after that, we're going to have to continue to dig through the code and start playing the cat and mouse game. I know the core devs don't want to play the cat and mouse game with the spammers and the shitcoiners, but it's probably an inevitable curse that we will have to fight as long as we want Bitcoin to be conserved. So, unlike the political world where the conservatives haven't conserved a damn thing in 50 or 100 years, we're actually really going to have to conserve Bitcoin if we want it to remain sound money. So, appreciate everybody for tuning in. Be good, y'all.